What if I tell you that one small cap mutual fund has delivered around 27% annualized returns over the last 3 years, around 20% over 5 years, and has still outperformed many of its large competitors? Welcome to The Explainer. Today, we're taking a close look at an absolute heavyweight in the wealth creation arena. I am talking about Bandhan's small cap fund, but here is the really important question. After such an incredibly strong performance, is Bandhan's small cap fund still worth investing in right now in August 2026? Or has the fund already become too large? And more importantly, should you start a SIP now? Should you invest a lump sum? Or should you maybe just wait for a correction? Let's find out. Okay, let's dive into this. Here's our roadmap for today. First, we'll cover the Bandhan small cap basics, then unpack its track record, compare Bandhan versus the peers, see who exactly manages the money, look inside the fund portfolio, and finally answer the big question: SIP, lump sum, or wait? All right, starting right off with Section 1, the Bandhan small cap, the reality check, and some ground rules. But before we begin, an absolutely crucial disclaimer. This explainer is purely for educational and informational purposes and is not investment advice. Mutual fund investments are subject to market risks. The returns, future scenarios, and opinions discussed here are not guaranteed. Please always consider your own financial goals, your investment horizon, and risk appetite, and consult a CB-registered investment advisor before making any investment decisions. So, Bandhan's Small Cap Fund is an actively managed equity mutual fund that launched back in February 2020. Its benchmark is the BSC 250 Small Cap TRI. Now, here's the kicker. Under the category mandate, a small cap fund is required to maintain at least 65% exposure to small cap companies. And this is incredibly important to remember. Small cap means very high risk. They literally cannot drift entirely into large cap names just to hide from volatility. So, look, this is absolutely not a fund for money that you might need in the next 2 to 3 years. For a small cap fund, you really need to think in terms of a minimum 7-year horizon, but honestly, preferably 10 or more years. Okay, moving right along to Section 2, unpacking the track record and looking at consistency over the medium term. Now, this is where it gets really interesting. Let's look at exactly where the outperformance lies. Depending on the exact cutoff date in late July 2026, the 1-year return hovers right between 5.6 to 9%, which is, right in line with the category average. But the 3-year and 5-year periods? They're staggering. We're talking a roughly 27% annualized return over 3 years compared to the category's 17%, and around 20% over 5 years against the category's 16%. And even more surprisingly, a massive, roughly 30% compound annual growth rate since its inception. So the true flex here isn't some massive 1-year spike. It's the medium to long-term consistency. And frankly, that's exactly what you look for in a small cap fund. It's all about finding a manager who can successfully navigate a rally, a correction, a recovery, and then a whole new cycle. Let's jump into Section 3, Bandhan versus the peers, and see how it's standing out in a crowded market. This completely illustrates the contrast. When we look at recent 3-year performance data against some of the most popular names that retail investors absolutely love, Bandhan's roughly 27% considerably outpaces Quant at roughly 19%, Nippon at 16%, and SBI trailing at 13%. But wait, hold on. Don't make the mistake of saying, well, Bandhan has higher returns, therefore Bandhan is automatically the best. That is absolutely not how mutual fund selection should work. You just cannot blindly chase the fund topping the recent return charts. We really have to look under the hood at the risk, the fund size, the valuations, and the overall strategy. Which brings us to Section 4, who manages the money, the team, and the philosophy. The fund is managed by a formidable team, including Manish Gunwani, Kirti Jain, Ritika Brera, and Gaurav Satra. Their investment philosophy really focuses on identifying businesses with genuine growth potential, but while paying very close attention to valuations and liquidity. I actually want to highlight this fantastic quote from Kirti Jain. Small cap investing should be treated as a long-term compounding journey rather than a short-term momentum trade. I mean, I completely agree with this approach. If you are entering this fund just because you expect the NAV to jump sharply over the next 6 months, literally do not invest. It is simply the wrong place for short-term momentum money. But all of this success has brought a massive new variable into play. Take a look at this number, 31,103 crore rupees. That is the fund's massive assets under management as of August 2026. It has swelled significantly. You see, in the small cap space, a rising AUM can make stock selection and trade execution incredibly challenging, mainly because smaller companies just have lower liquidity. Moving billions of rupees into a tiny company without spiking the share price is, well, it's really tough. So the narrative question becomes, does this massive size restrict their agility? Let's move to Section 5 and see how this builds inside the fund portfolio, looking under the hood. The latest portfolio data shows a major, highly deliberate exposure to financial services at roughly 25.5%. This includes massive holdings in spaces like banking and housing finance. Other highly significant sectors backing this up include healthcare at roughly 10%, capital goods around 9%, along with realty, consumer-related businesses, and chemicals. This specific financial tilt, which is quite heavy compared to its peers, has been a massive driver of their past outperformance. And look at these notable top holdings from around June and July 2026. We've got REC, SOBA, SBI, Arvind, and LT Foods, alongside South Indian Bank, PNB Housing Finance, and Cholamandalam. But you know what really stands out here? No single stock dominates. The largest holding is just over 3%. In fact, to manage that massive 31,000 crore AUM, the fund has expanded its breadth to over 230 stocks. This shows they are reasonably diversified, rather than just depending on 5 to 10 stocks, which helps them practically perfectly manage that liquidity risk we just talked about. So the crucial point is this valuation reality check. Despite the massive returns and that swelling AUM, the managers have maintained incredible discipline. The Bandhan small cap portfolio has a price-to-earnings ratio of 34.95. Contrast that with the small cap category average of an eye-watering 43.95. They've somehow managed to build a relatively cheaper margin of safety portfolio compared to what is currently an extremely expensive broader small cap market. They also hold nearly 10% in cash, which is much higher than the category average, giving them a really vital buffer to, buy the dip during inevitable corrections. All right, Section 6, SIP, lump sum, or wait, the August 2026 verdict. To answer this, we really need to look at the macroeconomic data. Right now, the forward PE of the overall small cap index market is 23.3x. Now keep in mind the long-term historical average is just 17.5x. This means the small cap segment is currently sitting at a significantly above average valuation. Simply put, small caps are just expensive right now, and price absolutely matters. So, synthesizing all this data from our sources, here is a practical, objective strategy to navigate August 2026. Number 1, prioritize systematic investment plans, or SIPs. SIPs allow you to average out your costs over time, which is honestly the perfect tool for a volatile, high-valuation market like this one. Number 2, avoid lump sum investments right now. Deploying a massive chunk of cash at historical valuation highs is just incredibly risky in the small cap space. And number 3, commit to a 7 to 10+ year horizon. Market corrections are inevitable, they happen to the best of them, but a long horizon lets you ride them out smoothly. And I want to leave you with this final provocative thought to ponder today. With the broader small cap market priced this high and Bandhan's AUM swelling well past 31,000 crore rupees, will the manager's valuation-conscious strategy and high cash buffer actually be enough to protect your wealth in the next inevitable market crash? Well, it's a question you must investigate and answer for your own portfolio. Thank you so much for joining me today on this explainer. Keep learning, stay focused, and I will see you next time.